What's good, everybody? And welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade for yourself. Please like, please subscribe, please share the episode. I'll really truly appreciate it. Please note anything discussed in this episode is not financial advice. Please do your own research before investing into any stock. This episode is going to be all about Nike, ticker symbol NKE. We're going to break the stock down, go into the earnings report, and really see what this company is looking like. Now, Nike is one of our favorite companies, and Nike's moat, their competitive advantage, is related to their strong brand recognition. Nike is the largest athletic footwear and apparel company in the world, okay? Nike has three major brands. The Nike brand itself, Nike also owns Converse, and the one that we love the most, the Jordan brand. And remember, we gotta love companies that have strong brand recognition across the globe. That's how they have the competitive advantage over their competitors like Lululemon and Puma, Adidas, things like that. Nike definitely has a lot of competitors, but we still love, again, I cannot reiterate enough, that strong brand recognition. To start the breakdown off, I need to inform everyone that there's been a lot of negative news around Nike stock over the last week or so. And as investors, we have to be able to sift through the weeds, and we have to be able to see what is warranted and what's not warranted. So to start off, I'm going to go through and break down a price target cut, and let's analyze it to see if this was really warranted or not. So this article that I pulled up reads, Nike slides after UBS cuts price target. Now UBS is an investment bank, and an analyst from UBS cut Nike's price target from 192 to 173. And the analyst kept a buy rating on the stock. So let's break this down here for a second. So analysts will cover stocks. They will cover stocks and they will do research, and they will put out an estimated price target that they feel a stock may reach over a 6 or 9 to 12 month time frame. Okay. And this analyst had the price target at 192 and brought it down to 173, but still kept a buy rating. Now, the reason why this is important is because of how the stock reacted to this. That was an overreaction in my opinion. So what I want to tell everybody is don't let institutions trick you out of your position. As investors, you have to be able to make decisions for yourself and go through the reports to see what warranted a price target cut. Don't just blindly take analyst research to the bank. Analyst research and analyst price targets are useful tools that we use to evaluate and decide whether or not we should get into a company. But it's only a tool. It's not the end all be all. You have to be able to make these decisions and be able to be nimble in this market and really understand what Nike has going on from a company standpoint. So what are some reasons why he cut the price target? He cited that Nike's business in China is not recovering as rapidly as hoped, and that supply chain challenges, temporary store closures in Russia, higher oil prices, and a rising US dollar will pressure the company's earnings outlook. What's also very interesting is that other institutions then began to lower their price target for Nike stock and also lower their earnings revisions down for the prior quarter. But something that is very key that we have to understand is that none of the negative news that came out last week actually came from Nike. None of it came from corporate, none of it came from management, none of it came from there. It all came from analysts outside of the company. At the end of the day, you need to hear reports from the horse's mouth. If you're just hearing random articles that come out about a company, don't take it unless you hear it from the company. You can take it as a data point and just keep in mind and just say that, hey, These analysts are revising earnings down. They're saying that Nike is going to have some trouble, and just keep it on your radar. But wait for the earnings call to make a move and then go from there, because they're going to tell you what's actually going on. Nike is a very well-ran company, and when they report earnings, they're going to give you the truth. So with all of that being said, I want to ask y'all a quick question. What do you believe more? Do you believe more about what other people say about you? Or do you believe more in what you say about yourself? Keep that thought in mind when you see stocks react to news articles that come out every single day. So let's take a look at how Nike did over the previous quarter. Nike's revenue was $10.9 billion, up 5% compared to the prior year, and it was better than what the analysts were expecting. Nike direct sales were $4.6 billion, up 15% on a reported basis. Nike brand digital sales increased 19%, led by 33% growth in North America. Gross margin increased 100 basis points to 46.6%, and the diluted earnings per share was 0.87 cents, which is again better than what the analysts had anticipated. Nike attributed their strong results to their consumer direct acceleration strategy. So, what is direct to consumer? Pretty much Nike is saying, I'm trying to cut out the middleman. I don't want to have to go through Foot Locker to make sure that I get my product into my consumers' hands. So that's why you see Nike growing their Nike direct sales up 4.6 billion. That's why you see Nike brand growing their digital sales up 19%, because management is focused on making sure that they improve that gross margin and making sure that they get their product out to consumers in a cheaper way. So that's going to help Nike's bottom line, and that's going to help get the consumers their products even faster. So we got to take a look at Nike's revenue breakdown. So Nike breaks down their revenue over 4 geographies. So about 38% of the revenue comes from North America. About 27% comes from Europe, Middle East, and Africa. About 21% comes from Greater China, and about 14% comes from Asia, Pacific, and Latin America. Now this reiterates Nike's global brand, because 38% comes from pretty much the US, and about 62% comes from international markets. So that really truly reiterates how Nike is a global brand. Now let's talk about the type of revenue. About 65% of their revenue comes from footwear, and about 31% comes from apparel. Nike is proof that you don't need that many types of revenue to be successful. Now, where they bring in the revenue from is diverse, which is exactly what you need. You need the diversification in the revenue stream, but you don't need that many different types of revenue. And Nike is very, very keen on what they do well. They know that they're a good footwear brand, and they know that they're a good apparel brand. So let's take a look at my favorite item for what I look for in a company, and that's the balance sheet, guys. It's the balance sheet. So if you take the cash and cash equivalents and you combine them together with the short-term investments, Nike has about $13.5 billion in cash and only about $9.4 billion in debt. So they've got more cash than they've got debt, which is very, very encouraging. Current assets about $26.9 billion, and current liabilities are about $8.8 billion. So let's take a little bit of time to discuss what are total current assets and what are total current liabilities. Current assets means that is money that the company is expected to receive within the next 12 months. Same thing with current liabilities, just in the opposite direction. Current liabilities is money that's expected to go out of the business within the next 12 months. So you want those current assets to definitely be more than the current liabilities. And with $26.9 billion in current assets, and current liabilities of 8.8 billion, we're talking about like 3-1 here. So this is very, very solid. So as I analyze businesses, I like to look at the annual EPS projections per year over time. Now this graphic that I am showing is from eTrade.com. If you have an eTrade brokerage account, you can click on the earnings tab whenever you look at a stock, and it will give you this earnings summary. So if you look here, Nike is projected to be growing their earnings every single year over the next 4 years. This is a very good data point to put into your pocket to keep in mind to say, okay, we're projecting Nike to continue to grow year over year. And now we're going to pair that together with how we believe management is actually going to execute this strategy and see if they actually can do it. So I really like how Nike is structured as a company. But as we know, no company comes without risk. So I have to highlight what the risks are. We have to be real, and we have to understand that the global supply chain shortages are still here. Nike does most of their manufacturing in Vietnam and China. So if any major manufacturing plant gets cut, that can really deal a blow to the projections that management has for the company. So, and also we have to understand that with the global unrest and all these issues, we need to take them into consideration, and this could affect the stock. Also, the stock price is down more than 20% on the year. So if you want to be in this stock for the next 3 to 5 years and buy shares of it, I think this is a great time for you to buy shares here. I think you can start you a position here, and if the stock goes down, just average down. But remember, don't do this until you do the research and actually have belief in the business. Actually understand what Nike is and understand what they're capable of. If you are trading this stock, I ask that you temper your expectations a little bit based on your entry point that you got into your position. I'm not telling you to get out of this position or any other positions you may be in on any other stock. I'm just telling you that the real market is back now. So we've got to temper our expectation. There's a whole lot of geopolitical factors and a lot of economic risk that could affect our stocks. So remember, we just got to be nimble in this market and just pay attention to what's going on. It doesn't mean that your particular price target for Nike or Apple or the S&P may not hit. It's just that you need to put in positions to be able to protect yourself. Remember, protect yourself in this market at all times because nothing in this game is guaranteed. As always, I thank y'all for stopping by the channel once again to check out this stock analysis episode. Please like, please subscribe. Make sure you hit that notification bell so you can be in the know every time I drop an episode. Let me know if you like Nike stock. Let me know if you're considering on investing it. Let me know if you're in trading it. Just let me know what you're doing related to Nike stock. And as a plea, one plea, if you're a sneakerhead, okay, if you've got every Jordan release in your closet, please consider making some money off of this stock. As always, don't pay for it. Trade for it. I'll catch y'all on the next one.